With crypto investing, more is actually less. And that's why this video is going to be an explanation of the 20-minute per day analysis that I do of the crypto markets to manage a 7-figure portfolio, and how you can as well get to the 7-figure mark using the strategy that I'm already using. So more is less, because people in crypto, they love to spend hours and hours a day analyzing the market, looking up all the news, looking at all the coins, doing technical analysis, and they've never actually spent the time to automate their system so they don't have to spend hours every day looking at the charts. Because I spend 20 minutes a day on my crypto analysis to determine where to buy and sell, and I do this full time. So if I only need 20 minutes, why do you guys need to spend hours a day? It's a waste of time. You need to automate it like people automate all other areas of their life. Why do people hire coaches to take them to the gym? Why do people hire chefs? Why do people hire staff? Why do people code up algorithms and code up certain tech products to automate their life? It's all about automating and removing yourself from certain parts of your life to make everything more efficient. So your crypto investing is the exact same. You should be able to automate your investing so that it only takes you a small amount of time. And that's what I've done. I've been in crypto for 5 years. I've basically done this full time for the past 2.5 years. I've automated everything that I've learned into 20 minutes a day. And that's all I need to do to make the important investment decisions of managing the largest portion of my crypto portfolio, which is my long-term investments. And so let's get started now into what these actually are. So number one is an algorithm called the Hunter algorithms. It's basically a funding database tool that tracks and gives you signals to buy and sell on a high time frame. So we basically made this in August 2021, and every signal since has been a live signal, except for a couple. These two were not live signals, but everything else is pretty much a live signal. So what we have here is green and yellow being buy signals and red is sell signals. These were actually sent. I actually sold here and I actually bought here. These are real signals. So this is the first tool that I use. What I do is I go to TradingView and I load up the indicators. It's Dip Hunter, Bitcoin Take Profit Hunter, and I just have a look. Has a signal been sent to the group? Has a signal been sent to my automatically generating signal Telegram group to tell me if it's time to buy or sell? If it hasn't, then I don't, if it hasn't, then I don't have to do anything. If it has, then I'm going, okay, look, it's probably time to buy. Let's take a closer look. Now, the second data set that I use is the funding data that I find on Coinalyze.com. Now, you can look at funding data everywhere, but I like the tool here. It's a good visualization, and it's very easy to get access to. It doesn't cost any money. So what I do is I go to Coinalyze.net, I go into indicators, and I press aggregated funding data, and it loads up this tool. Now, if you don't know what funding data is, let me give you the 20-second breakdown. Funding data is a representation of what the average trader in the market thinks is going to happen going forward. Now the thing is that you guys have to remember, what's one of the biggest lessons of investing? You have to do the opposite of the herd. So if everyone is thinking price is going to go up, probably going to go down. And if everyone thinks price is going to go down, it's probably going to go up. So funding data is a representation of this sentiment and what people think is going to happen in this data. So when you have these green and red spikes, the spikes are basically showing what people are thinking is going to happen. So when it's green, it means people are bullish on average. They think price is going to go higher. And when it's red, it means people think price is going to go lower. And as you can see, that every time when we've had a bottom, it's been when the red was really low. It was a big spike because people got really afraid here. They got really, really scared that the prices were going to go lower. I mean, look, if you saw this on a chart, you go, oh my God, prices are going to go lower. That's why the price bottom, because everyone was expecting it to go lower. And it's the same sort of thing here. You get red spikes, that's a bottom. Now, it's obviously not perfect. You can see that there's red spikes here. Doesn't mean it's a bottom. This data set needs to be used in what we call confluence with other data sets. So confluence is when you have a number of different data points pointing towards the same thesis. If I have funding data telling me that people are bearish, if I have the Hunter algo sending buy signals, if I have the other tools that we're going to look at saying buy, when we have all of these tools in confluence saying the same thing, that is when you want to be buying, because you have confluence. Confluence gives you confidence to buy, because there is a larger likelihood that you are correct if you have more data sets in your favor, okay? And so the third tool is an interesting one. It might look a little bit confusing, but I'll make it really simple for you guys. And it's called bids/ask step. So you go to this website, tradinglight.com. I think it might cost money. You go into indicators, you type in D7R, and it's a guy on YouTube, but he's got a bunch of cool tools. The one I like is down here. It's called bids/ask depth. You press that, you add it to the chart, and it looks like this. Now you're probably like, what the fuck is this? Like, what am I looking at? A bunch of squiggly lines and shit. Well, this data is showing you how many bids and how many asks are placed in the market at a given time. So green is people who want to buy, and red is people who want to sell. So let's say, because this is on Coinbase, let's say that, and so what is a bid? Well, bidding is when you want to buy something, and asks are when you are asking to sell something. So a bidder is someone with US dollars, because this is ETH/USD. A bid is someone with US dollars who has an order placed to buy Ethereum at a certain price that they specify. And an ask is someone with Ethereum with a sell order placed at a specific price, asking to have their Ethereum sold. And so when you think about it, price is basically, whatever the price is doing is a battle between buyers and sellers. At the end of the day, it's just a battle. And you can see like the battle on the charts, right? You can see that the price hit this level 3 times and it finally broke through. Well, that's a battle between the buyers and the sellers. And you can think about buyers and sellers as a Lord of the Rings battle of like the orcs versus let's say the guys on the horses, right? Let's say it's a battle of orcs and the guys on horses. Right here, let's pretend that the orcs are trying to push price up. The orcs have an attack on the guys on horses, they fail, they retreat. They try again and they try again, and eventually they break through. They destroy the guys on horses army and they make the advance. That is like that is basically what price is. It's a battle. It's a Lord of the Rings battle. And so if the markets are a battle, well, what does the bidding and the asking mean? Well, bids and asks are future buy orders or future sell orders, because they're people who are trying to buy or sell in the future. So when there's a lot of people bidding, that's very similar to in a Lord of the Rings battle where there is like an army of 1,000,000 horses who the bids and asks are very similar to a battle between the orcs and the horses, right? Because what happens is, at bottoms, we have a lot of bids, okay? So if you look at this blue line here, every time the green goes below the blue line, you'll see that the price actually finds a bottom, and I'll prove this for you. Now, the price went below the blue line here, that was the exact bottom. Price went below the blue line, that was a bottom. And if you look at every single time it goes through the blue line, it hits a bottom, all the way back over here. Let me zoom in a bit. So you can see this was 12th of March, boom, COVID bottom. This one here wasn't quite perfect, but it was pretty much. This one here, perfect. And let's look up here for a couple more. We spiked below on the 21st of January. Where do we bottom? 21st of January. Perfect. So why does the price bottom when we have all of these people trying to buy? Well, think about it. Why does price go up? Price goes up because there's more buyers than sellers. And what is a bidder? A bidder is a future buyer, aren't they? If someone is trying to buy, they're probably going to buy in the future. If you have a shop with 100 people standing out the front of it, and you have another shop with 5 people standing out the front of it, which shop is going to have more buyers when it opens? Obviously the one with 100 buyers. So if you have a coin which has a lot of bidders, and you have a coin which has not many bidders, which one is probably going to go up more in price? It's the one with more bidders. So when you have a lot of people trying to buy, that is a sign that the area that the price is at right at that moment is an area of a lot of interest. A lot of people want to buy at whatever price it is. And you notice that the bids only go up when the price falls. So the thing is, the bidders are people waiting to buy. So when you have the price up here and not many bidders, it's like people are sort of interested, but not really. And as price gets lower and lower, it's like when a shop has a discount sale. Imagine the line of the Apple store if they announce tomorrow 20% off all Apple stock. Or off all Apple products. Everyone would be fucking running to the Apple store to line up. And it's the same thing here. Ethereum's on a 20% discount. Oh wow, look at all the people lining up at the fucking market store to buy Ethereum. It's the same concept. So that's why we use this tool. And as we said before, markets are a battle between buyers and sellers. So when price goes down, it's like the orcs are winning. But when the price bottoms and we have all these bidders, that's like the horse army. When the fucking orcs think they've won, they've crashed price, and they look over the mountain and they see and they hear the galloping of the horses as they come down the mountain. This new army of 1,000,000 new horses, and the orcs are like, oh shit, what have we done? And then the orcs get obliterated as price goes higher. It's the same sort of concept. See, it's a battle. And that's why we use this tool. Now, you're probably wondering, it's so good for buying, can we use it for selling? No, we can't use it for selling. I've already tried. It's not accurate. I don't know why. So it is just a buying tool. And also keep in mind, you have to use Coinbase. I've tested the data set on all these different exchanges and they don't really work well. Coinbase is the best one. And this is for a reason. This is for a specific reason. Coinbase is a spot exchange, meaning that it's real buyers. It's people who have real US dollars trying to buy crypto to hold. When you use, let's say, Deribit or Binance, these places that have buying and selling are not real buyers and sellers. They're people who are using leverage. So they're borrowing money. They're borrowing money for probably a short-term trade. You want to use real buyers because that's a real reflection of demand, which is Coinbase. So the last data set is unrealized profit and loss. So this tool is basically showing you what the average investor into Bitcoin has in terms of profit or loss. So let's look at a couple of different points in the market. The blue line is the real unrealized profit and loss, and the black line is the price of Bitcoin. So if you look at when prices go low, the blue line goes low as well. And then when prices go high, the blue line goes high as well. Because as price goes higher, people are making money. You can see here it says 71.98% is the net unrealized profit and loss. So you use this tool to determine whether people are in a profit or in a loss on average. And why is this data important? Well, what is the first thing a retail investor does when they make money? They tell their friends. So imagine at the top of the bull market, the average investor has a 70% profit. They tell all of their friends FOMO into the market. Is there anyone left to buy, or has everyone now bought? Everyone has already bought. There's no one left to buy, obviously, right? If everyone's already bought. That's how crypto markets work. 20 million people make money. They tell all their friends. The friends that are interested buy in. They buy the top because there's now no more buyers. Everyone's already bought. Things are overvalued. They have no idea what they're doing. That's the top. That's why this data set is useful, because it is going to show you when people start flexing that they're making all this money. Now, when do the least amount of people talk about crypto? It's when they're losing money. Imagine you're at Christmas dinner in, let's say, 2022, and the price is down like 50%. You're not going to tell your parents about your crypto investing because it's going to shit. So when no one is talking about crypto, when it's dying, when it's quiet, that is when you want to be buying, because it's when the least amount of people are interested. People will become interested in the future because there's stuff being built, there's real adoption occurring. They'll come later. But in terms of buying, you want to buy when the least amount of people are interested. Well, no one talks about crypto when they're losing money. So that's when you want to buy. And that's why this chart's important. It's like a macro overview of where the current market is and where we expect to go in the future. And so the important thing is that each tool by itself is not perfect. This one's almost perfect, but you can't use it to sell. But when you combine them together, you get a really good picture of what you should be doing in the market, and you get an 80 to 90% accuracy for buying the bottoms and selling the tops. Now, in terms of selling, the main thing I would be using is the Hunter algorithm and the funding data, and also the net unrealized profit and loss. You wouldn't really use this one for selling, okay? And so this 20-minute per day crypto analysis is just one of the many informational documents that you'll find inside of my Mastermind. Now, this Mastermind is a private exclusive community of investors who want to get to the 7-figure mark. And I have all this information that I lay out for them in this directory. So I've just gone over one of the courses. There's a bunch of other courses in here. I bring on about 5 people per month to join the Mastermind, and I've already got a couple spots filled for March. And if you're watching this later, there might be a couple spots left, I'm not sure. So if you're interested, go to danscryptomastermind.com and you'll find all the information there if you're interested to join. But yeah, thank you guys for watching the video, and I'll see you in the next one.